Hello and welcome to the Business Standard Banking Show. In line with most public sector banks, Punjab and Sindh Bank also reported healthy set of numbers for the July-September quarter, with net profit rising 27.5% to 278 crore, while asset quality has also improved. We today have Swarup Saha, MD and CEO of Punjab and Sindh Bank, to talk about the future roadmap for the bank. Mr. Saha, welcome to the show.
Thank you. Thank you, Mr. Saha.
Punjab and Sindh Bank reported healthy growth in retail and MSME advances, 19% and 17.5% respectively in the second quarter. What is the overall loan growth target you are looking for the current financial year?
Yeah. We are, as far as earlier guidance also, when we finished our Q1 results, we had given an overall credit growth target of above 15%. In September quarter, we have done a 9.12%. So we stick to the guidance of 15% plus for the overall financial year. That is our guidance, and that will be driven primarily by these growth in the retail agri and MSME segment of plus 20%. We are targeting between 20 to 22% growth, and in the corporate segment, we are targeting a growth of 7 to 8%. So now we are at 9% plus. So we are keeping the guidance still on the 15% growth.
Was it a conscious strategy to grow corporate book much slower than the RAM book, the retail, MSME and agriculture, because the portion of corporate in the total advances has come down on an year-on-year basis?
Yeah. See, a bank of our size with a advance of around 74,000 crores needs to balance its portfolio very judiciously. And therefore, in the past, when the bank was going through a cycle of high NPA and losses, the bank took a conscious decision to move away from the corporate, primarily corporate segment to primarily a RAM segment. So the earlier the ratios were at 55-45 in terms of percentage terms, in favor of the corporate segment. Now we are rebalancing that portfolio and making it a reverse, and we are intending to grow towards 55% of RAM and 45% of corporate advances. So that is what, because we are a very small in size in terms of the relative size in terms of within the public sector space. So we feel that we will grow qualitatively now, having come out of nearly 4 years of losses. And now that we have turned around last year with a good number of net profit of 1,039 crores, we want to maintain that momentum and maintain it in a judicious way going forward.
So while loan growth was over 9%, the deposit growth was only about 3.2%. So which is a thing which is across the banks. So what are the steps you are taking to boost deposit growth?
See, deposits again, as you rightly said, that the systems of credit is growing plus 18%. The deposit is growing at 9% plus. So there is a gap of nearly 9% in the system as a whole. So we also have a gap of credit between a credit growth of 9% plus and a 3% plus in deposit. So now what we are doing is that we are bringing in more and more customized products. We have created new fixed deposit products for 601 days and 300 days with competitive rate of interest. And the other area which we are really focusing on is on the acquisition of salary accounts. So that is a big drive that we are making. See, our CASA ratio has been traditionally one of the lowest in the industry. We are building it up. We are still the lowest in the industry. But the good part is that from a 30% September 21 ratio, we have moved to 33.56% in 1 year down the line. So we intend to take it up. But the fact remains that we have the lowest CASA ratio amongst the public sector bank space. So what we are now also targeting is good quality current accounts and mobilizing salary accounts. 2 success stories I would like to share with you here. We have tied up with the Municipal Corporation of Chandigarh for 10,000 plus salary accounts, of which we have already opened. Another success we have got is in the recent times is opening around 14,000 salary accounts of Nagar Nigam Lucknow. So this has happened in the last 2 months.
So what is the deposit growth target you are looking for the current financial year?
As of now, I'm looking anything between 10 to 12% on deposits with a 15% growth in the credit side I need to also balance my portfolio and looking into a 10 to 12% growth in the deposit side.
Deposit side. But coming back to CASA, in a rising interest rate scenario, don't you think it's very challenging to get CASA deposits because people will like to more have their money in the savings deposit because fixed deposit in the fixed deposit because rates are gone up in the fixed deposit side?
Yeah, see, the as an intermediary bankers, we provide the platform to a customer to open a savings account first with us, right? Now, if I suppose I was talking of the success story of the salary accounts. Now, a government employee maintaining his salary account with us, if I can increase the number, and if I increase the products with them, any customer, a salaried account will do some mutual fund investment, will do some health insurance, will do some credit card business. Particularly if he is a credit card holder, he will maintain a minimum balance in his account to maintain his bills. Right. So these are the products which get integrated into a normal savings account which lifts my CASA. So my retail term deposit will also plays an important role, but this is the operating expenses for which a customer maintains a savings account balance.
But sir, coming to margins, then your margin was about 3.06% in the second quarter. Now, since FD rates are rising, do you think it will be possible to retain those kind of levels?
Yeah, absolutely. You're absolutely right. That's why in our guidance slide, if you see on the last page, you will find in NIM guidance, we have maintained at a conservative level of 2.90 plus. Okay. On a quarter basis, we are at 3.06. On a half-year basis, we are nearly 3. Okay. Nearly 3. So there will be some impact. I appreciate that this point will be there, that there will be some impact on the deposit side. So, but if I can increase my other income, increase my business income from advances and investments, whatever the other avenues here, so I can compensate. But that's why we have kept a conservative guidance of over 2.90. But we are fairly confident that we should be above 2.95 at least.
Other area, sir, is cost to income ratio, which is very high at 65%. How do you plan to bring it down?
Yeah, yes. See, the traditionally this bank has been, this is one of our challenges. One was the CASA and one is the cost to income ratio. So the cost to income ratio had actually been, if you go into a history of the bank, it had crossed 80% at some point of time also. So from that point, we finished March 22 at 61% or so, 61% plus. In June, it got increased because of the income getting squeezed due to the investment part. We didn't get the support from the investment part due to the market conditions. The yields went up. So our cost to income ratio again went up in June quarter. But we have brought it back again to 65% and we have compensated through some other income. But the point remains that we are still on the higher side. How do I address it? The only way to address is to build my third party product income, commission income, much more strongly. So that's why I told you that those products that we have brought will not only be able to give me the cushion for building my SA base, savings account base, but will also give me an avenue for generating income for myself. My bank assurance business income, what I am having, I want to make it 3 times in the next year. So I want to make it 3. So I'm building that up. And maybe in the next year, we will have a much more traction on the core fee income, apart from the trading of investment and recovery return of accounts. And another, of course, is we will be following very strongly on this recovery and return of accounts. We expect some resolutions to happen. Our recovery and upgradation target for the entire year is above 2,000 crores. Right. Out of that, half yearly, we have already crossed 700. So we are very hopeful that we will be able to maintain that guidance of more than 2,000 crores in recovery and upgradation.
Now, coming to the asset quality part, while asset quality has improved, but gross NPA is still high at about 9.67%. So one is, of course, recovery. You can beef up recovery to lower the gross NPAs. But apart from that, are you also planning to sell NPAs to NARCL?
We have 7 accounts identified amounting to 1,590 crores. So those accounts are under discussion. So that we hope some of them will at least get resolved, one or two in the current quarter, and maybe some will in the next quarter. So as the resolutions happen, I think everyone will come to know about it. So we are hopeful that some resolutions will get from that. And we also old NCLT accounts, which are where we are 99% already provided for. We expect some good chunky recoveries in those accounts. So that will also we have kept in mind while we are talking on asset quality. So we have brought it now to below 10%. Our guidance was in June quarter when we declared our results to bring the gross NPA below 10%. We have already brought it below 9.67%. So going forward, there's a lot of scope to further reduce it. And maybe we have kept a guidance of below 9% now. But if all the NARCL resolutions happen, maybe we can go below 8% also by the end of the financial year.
Mr. Shah, thank you so much for speaking to us. It was a pleasure talking to you.
Thank you. Thank you, Mr. Saha. Thank you.
Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.